What you're about to witness is not a headline. It is not a political stunt. It is not a spontaneous military maneuver. It is a structural event. And if you stay with me until the end of this analysis, you're going to see why what just happened was not unpredictable. It was scheduled by history itself. When a former U.S. president signals renewed military alignment in the Middle East and sends trusted envoys into proximity with the USS Abraham Lincoln carrier strike group, most people see politics, optics, posturing. But empires don't move aircraft carriers for optics. They move them when pressure inside the system reaches a threshold. Right now, global debt has crossed $300 trillion. U.S. federal debt sits above $34 trillion. Interest payments are consuming a growing share of federal revenue. In the last 15 years alone, we have seen the 2008 financial crisis, the 2020 pandemic shock, supply chain fractures, and the highest inflation surge in 4 decades. Energy markets have become weapons. Trade routes are contested corridors. Alliances are quietly shifting. And Iran has been waiting, not emotionally, not ideologically, structurally, because when a dominant power reaches a certain stage in its life cycle, challengers do not attack randomly. They probe, they test, they wait for signals of overextension. What just happened is not about one ship. It is not about one political figure. It is about a pattern that has governed every major power transition for centuries. If you understand the pattern, you understand what comes next. The pattern has 4 stages, and once you see it, you cannot unsee it. First, a power builds dominance. It constructs financial credibility, military superiority, and trade control. Its currency becomes trusted. Its navy secures shipping lanes. Its institutions shape global rules. Second, it expands beyond sustainability. Debt rises. Military commitments multiply. Foreign entanglements increase. Currency supply grows faster than productive output. Political rhetoric intensifies because maintaining perception becomes as important as maintaining power. Third, a challenge arises. Sanctions replace diplomacy. Trade wars replace cooperation. Proxy conflicts replace direct confrontation. Military positioning becomes a language of its own. Fourth, correction. Sometimes it is currency realignment. Sometimes regional war. Sometimes systemic restructuring. But always correction. This is not speculation. It is repetition. Let's walk through the evidence carefully because retention is built on clarity, not drama. Consider the British Empire before World War I. By the late 1800s, Britain controlled nearly a quarter of the world's landmass. The pound sterling was the world's reserve currency. The Royal Navy dominated global sea lanes. London was the center of global finance. That was stage 1, dominance. Then came stage 2. Britain financed vast colonial infrastructure. It guaranteed trade routes from India to Africa. Military expenditures rose. Public debt climbed. Meanwhile, Germany and the United States began outpacing Britain industrially. Britain's strength became increasingly financial rather than productive, expansion without proportional output growth. Then stage 3. Germany's naval buildup directly challenged British maritime supremacy. Alliances hardened. The European system became polarized. The assassination of Archduke Franz Ferdinand in 1914 did not cause World War I. It triggered a system already saturated with tension. Stage 4 followed inevitably. The war devastated Britain's finances. The pound lost reserve dominance. The United States emerged as creditor to the world. The empire never regained its prior supremacy. Pattern confirmed. Now consider the United States and the Bretton Woods era. After World War II, the U.S. controlled nearly half of global industrial production. The dollar was tied to gold at $35 an ounce. Other currencies were tied to the dollar. America was the world's creditor. Stage 1. Then came Vietnam War spending, domestic expansion programs, and massive fiscal outlays in the 1960s. Dollars flowed overseas. Foreign central banks accumulated more dollars than the U.S. had gold to back. Stage 2. By 1971, confidence began to fracture. France and other nations demanded gold in exchange for dollars. A run on U.S. gold reserves accelerated. Stage 3. President Nixon closed the gold window in August 1971. The dollar became fiat. Inflation surged through the 1970s. Oil shocks followed. The system reset. Stage 4. Pattern confirmed again. Now go back further. Rome. Rome built roads, aqueducts, legions. Its denarius was trusted across vast territories. Trade flourished. Military dominance was unquestioned. Stage 1. To finance expansion and internal demands, Rome began debasing its silver coinage. More coins. Less silver content. Military spending expanded. Political instability increased. Stage 2. Inflation followed. Confidence declined. Generals competed for authority. External tribes pressed weakened borders. Stage 3. Fragmentation and transformation followed. The Western Empire fell. The Eastern Empire restructured. Correction. Stage 4. 3 different civilizations. 3 different eras, same mechanism. Now bring that mechanism into the present. After 1945, the United States built the modern global order. The dollar became reserve currency. The U.S. Navy secured sea lanes. NATO formed. After 1974, the petrodollar agreement tied oil transactions to U.S. currency, reinforcing demand for dollars worldwide. Stage 1, then expansion accelerated. Military bases expanded globally. Engagements in Vietnam, Iraq, Afghanistan, and beyond stretched decades. Federal debt grew from under $1 trillion in 1980 to over $34 trillion. After 2008, quantitative easing injected trillions into financial markets. During the pandemic, stimulus programs added trillions more. Currency expansion, military overextension, fiscal expansion. Stage 2. Check. Now stage 3. China challenges U.S. manufacturing and technological dominance. Russia contests NATO's eastward expansion. Iran strengthens proxy networks across the Middle East. BRICS nations discuss alternative settlement systems outside dollar channels. Sanctions have become tools of economic warfare. Energy choke points like the Strait of Hormuz remain critical to global supply. And into that environment, signals are sent, political envoys repositioned, aircraft carriers move. Deterrence is not peace, it is structured tension. Iran does not need to defeat the United States militarily. It only needs to operate inside a system already carrying financial strain and political division. That is what challengers do in stage 3. Undeniable. Now let's address something critical for viewer retention. Why this matters to you. Because most people think geopolitics is distant, abstract, elite. It is not. When empires shift, currencies shift. When currencies shift, purchasing power shifts. When purchasing power shifts, savings, investments, and cost of living shift. Stage 4 never stays confined to diplomatic rooms. It shows up in bond markets, in oil prices, in inflation reports, in defense budgets, in alliances that quietly realign. And here is the uncomfortable truth. Debt servicing costs in the United States are rising faster than tax revenues in certain periods. Interest payments are approaching levels comparable to major defense expenditures. Energy corridors are contested. Military assets are repositioned. History does not repeat emotionally. It repeats mechanically. Some will say this time is different. They will argue American exceptionalism. They will say technological innovation changes the equation. Artificial intelligence, digital finance, automation. But Rome had engineering wonders. Britain had industrial dominance. The United States in 1970 had unmatched military capability. Innovation does not cancel arithmetic. Structural patterns do not respond to optimism. They respond to balance sheets. They respond to leverage ratios. They respond to sustainability. And that is why Iran was waiting. Because stage 3 is when challengers test the perimeter. They test shipping lanes. They test sanctions. They test alliances. They test political will, not recklessly, strategically. The USS Abraham Lincoln is not merely a vessel. It is a symbol of projection. But symbols do not eliminate structural constraints. Now here is where audience engagement deepens. Ask yourself, if you were a regional power observing a global hegemon with rising debt, political polarization, global military commitments, and growing competition from multiple fronts, when would you push? Stage 1? No. Stage 2? Risky? Stage 3? Precisely. Because the hegemon is strong enough to deter outright assault, but stretched enough to be tested. That is where we are. And this is still before stage 4. Stage 4 is not necessarily catastrophic. It can be negotiated, it can be gradual, it can involve currency restructuring, alliance recalibration, or technological shifts in settlement systems, but it is correction. And correction always follows prolonged imbalance. This is not about cheering for collapse. It is about recognizing cycles. The most dangerous phrase in geopolitical history is, "This time is different." It rarely is. After 1945, the machine was constructed. After 1971, the monetary lever was detached from gold. After 2008, liquidity accelerated dependence on financial engineering. After 2020, fiscal expansion reached wartime levels without formal war. Now the system is tightening. Aircraft carriers move when systems tighten. Envoys travel when signals must be sent. Challengers observe when thresholds approach. If you understand this, you do not panic. You prepare. You diversify exposure to single system risk. You monitor macro indicators rather than social media outrage. You watch bond yields, energy flows, and trade alignments. You recognize that geopolitical theater often masks structural repositioning. And here is the critical retention anchor. We are not at the end of the pattern. We are mid-transition. Stage 3 is a pressure chamber. Stage 4 is resolution. What form will resolution take? Currency realignment, energy settlement, diversification, regional confrontation, institutional restructuring? We do not guess emotionally. We watch structurally, because patterns leave clues. Bond markets signal strain. Energy markets signal leverage. Military positioning signals deterrence thresholds. When those align, transition accelerates. This is why the move matters. Not because of partisan politics, not because of headlines, because it fits the pattern. And when events fit long-established structural patterns, probabilities increase. This is not prophecy, it is historical mechanics. If you found this analysis valuable, understand that this is only the surface layer. The deeper layer is how the post-1945 financial architecture was engineered to sustain stage 2 for decades longer than previous empires. The next layer is how digital currencies, central bank coordination, and energy realignment could shape stage 4 differently than prior corrections. And the most important layer is how individuals can navigate systemic transition without being caught unaware. Because those who recognize patterns early are not shocked by outcomes. They are positioned for them. The machine is not breaking randomly, it is following sequence. And sequence, once identified, becomes strategy. Subscribe. Because in the next analysis, we will break down how the modern monetary system was constructed to delay correction, and why delay often makes the eventual adjustment more profound. History does not whisper before it turns. It signals. The question is whether you are watching the signals or the headlines.